Welcome to the Chrisman Commentary, Daily Mortgage News Podcast. I'm your host, Robbie Chrisman. Topics on today's episode include the U.S. Federal Reserve's plans to roll back an important capital rule, my interview with Optimal Blue's Sara Holtz on how Optimal Blue approaches marketing as a market leader, keeping pace with product innovation, evolving with industry needs, and charting the future of strategic brand engagement, and what Chair Powell said on day 2 of his congressional testimony and how it compares with other recent Fed chatter. Thanks to today's podcast sponsor, Optimal Blue. Optimal Blue bridges the primary and secondary mortgage markets to deliver the industry's only end-to-end capital markets platform, helping lenders maximize profitability and operate efficiently so they can help American borrowers achieve the dream of homeownership. I've been experimenting with breeding racing deer. People have accused me of just trying to make a fast buck. There are no fast bucks to be made in residential lending, and the correct compensation is still a continuing topic. A veteran LO wrote into us, quote, "My belief is that most LOs can make the same amount of money with lower rates and lower comp, grow their business and have less drama. LOs state they lose 3 out of 10 loans due to rate. Well, if you make 100 basis points on 7 loans at $350,000 per loan, that's $24,500. If you make 70 basis points on 10 loans at $350,000 per loan, that's $24,500. And I promise I can say the word per correctly even though I just said it wrong twice. Most business, however, is done in communities, and as you do more loans, your community grows and you get more opportunities. It also eliminates a lot of stress of quoting when you win the deal on the quote." End quote. Switching gears slightly, asset prices like Treasury securities and mortgage-backed securities are a matter of supply and demand. The U.S. Federal Reserve unveiled plans to roll back an important capital rule that big banks have complained limits their ability to hold more treasuries and act as intermediaries in the $29 trillion market. The Fed board voted 5-2 on Wednesday to propose changes to what's known as the Enhanced Supplementary Leverage Ratio, which applies to the largest U.S. banks. The revisions would reduce holding companies' capital requirement under the ratio to a range of 3.5% to 4% from the current 5%. Their banking subsidiaries would see that requirement lowered to the same range from 6%. The belief is that MBS will tag along for the ride. For today's interview, I wanted to welcome to the show Optimal Blue's Sara Holtz to talk about how Optimal Blue approaches marketing as a market leader, keeping pace with product innovation, evolving with industry needs, and charting the future of strategic brand engagement. She's CMO at Optimal Blue, and as a seasoned marketing and communications leader, she brings more than 20 years of career experience, including more than 2 decades of driving change in the mortgage industry. Sorry to date you, Sara, although you'll hear shortly that she decided to date herself from her days back before the internet working in marketing. As Chief Marketing Officer, she's working to drive unified marketing and communication strategies to advance Optimal Blue's business priorities and further extend the company's influence. I want to start by talking about marketing in the mortgage industry in general. If I think of somebody that works for NBA or maybe Lululemon, it's easy to figure out like their channels of marketing. But you don't work, and it's not like Optimal Blue is an originator even, where you're trying to target the general public. You're trying to target people that work within the industry. I'm wondering if you can talk a little bit about kind of the strategy of being a marketer for a company targeting those in the mortgage industry.
Yeah, that's such a great question. I've been in marketing and communications, I'm almost embarrassed to say, over 20 years. It's actually a little bit longer than that. And during that time, there's been a lot of innovation and evolution in marketing and communications as a whole. In fact, 20 years ago, everything was very separate. So you had, your PR agency was very separate and didn't understand what the creative arm of a company was doing, that didn't understand what the, demand generation part of the company was doing. And now everything is so integrated. Everything is, the most successful marketing strategies are ones that are cohesive, comprehensive, integrated. The left hand absolutely knows what the right hand is doing. And I would say that's unequivocally true for this industry, especially because, most of our marketing teams have been around a long time. You get some influx of new people, but most folks have been at different companies. So how do you stay innovative as a marketing team? Added to that, the layer of the industry, which, gets back to your original question around what's the difference here. I think it's twofold. One is this industry is constantly moving forward, right? The technology is advancing. Things are becoming automated at a faster pace than ever before. In addition, we're all rooted in this passion and purpose of getting people into homes, of actually helping people fulfill the American dream of home ownership. So there's this interesting combination in this industry where you're kind of like the biggest little town, or it's this, huge network, but we're all kind of family, and that we really have this passion and purpose that aligns us. So when it comes to marketing and competition and how you view that as a marketer, you're really just trying to tell your authentic value as a company. What is your value story, right? It used to be all about features, and now it's about how you're actually solving real problems for your lenders so that they can get more people into homes, so that we can actually collectively work together as an industry. And that doesn't stay far from my mind every day. It's this twofold of how do I innovate from a marketing perspective in the innovation of what we're doing and saying in a cohesive way. And yet, how do I tell this authentic value story that I'm fortunate I work at a company that 100% has, right? Like the value that Optimal Blue offers is unmatched in the industry. And that's an amazing place to be. In fact, I've coined a term, as part of that, authentivative marketing.
Ooh.
Which is the combination of authentic value that you're talking about with innovative marketing strategies. And I've not worked at a place that has that truer than this one.
Yeah, and I wanted to talk about that because Optimal Blue is a market leader. And so you're kind of marketing from the front in a lot of ways, which has great benefits, but there's also some harder, parts of that. Maybe it's, well, it's harder to do a little guerrilla marketing campaign because everybody knows us already type of thing, or whatever it might be. You're the expert, not me. How do you approach marketing as a market leader, especially, here at Optimal Blue?
Well, and especially in our industry, market leadership actually comes with a lot of responsibility. So it's not just what we say or how we say it. We're demonstrating how we are innovating an industry. And keep in mind, the capital markets ecosystem is the framework of profitability for a lender. So as lenders are profitable, they can convert more loans for folks. So truly what determines affordability, what determines people getting into homes is the strategy that a lender takes from pricing all the way through to what they're doing in the secondary market. It's a big responsibility. And especially because I truly believe we're authentivative marketing, which means we're telling about our real value, that we have to lean into what we actually bring to the industry. And from Optimal Blue's perspective, we have a modern core, a modern platform, our unmatched pricing accuracy, and our deep, deep industry expertise that's built over 20 years. We've been innovating since the get-go. From when we launched to when we are now, there's a lot of false narratives out there around that. But the truth is, we're a modern platform that's been innovating and continues to innovate at a rapid pace. So I take all of that into context as, the market leader and responsibility, and especially having, our CEO on board, Joe Tyrell, which has been a lot of fun, and our Chief Product Officer, Aaron Wester, and all the rest of our leadership team, and telling authentic narratives, authentic stories about what we're doing to fundamentally change this industry and keep the pace of the innovation that we started. It's really been amazing to tell those narratives.
I want to kind of dive into success, or maybe a campaign doesn't go how you want it, because impressions don't always lead to clicks. Clicks don't always lead to demos. How do you properly assess what's working? And it could be that something generates a ton of impressions and no demos, and it could be something that generates a ton of demos, but it was so targeted that it didn't, reach the general public. So how do you kind of balance all of that?
Yeah, gosh, another great question. But you hit the nail on the head in how you asked it, which is marketing at its fundamental core is data-driven. And so understanding the data behind what you're doing, how it's tracking, how it's integrating. And so we're going to pull out some layers here before I answer your question specifically, because you mentioned campaigns. So I've got to pull out the layers of telling the authentic narrative, right? Like that's not about whether we make a sale. That's about telling the reputation of this is the authentic narrative that we're putting forth. And then pull aside like how we actually want to help our clients be successful and focusing on client success, which is 100% accurate as well. So now you're talking pure marketing strategy and how you take a campaign and measure the results of that. And fundamentally, the way I do that is by opportunity. So it's not necessarily about, like you said, how many clicks I get. It's, am I helping clients recognize the value that we can do and solve real complex problems that they're facing? And how are they engaging with that invitation to find that out from us and then take to the next step? And then it goes through an entire, cycle of that. So how am I helping them answer questions? As a marketer, first of all, decisions are not made by one person. They're made by groups of folks usually have a decision maker, but you'll have influencers or people asking questions. So it's really critical to make sure you're answering questions of clients and potential clients at every stage of the game. In addition, people don't just turn it off like a robot when they're engaging with your content to make a decision. They could be taking a walk and have an idea in mind, or in a different type of meeting. And so being omnipresent, being able to have on-demand engagement demos, as you said. So having an on-demand demo so they can really get an understanding of what your product can do to solve their problems, and then measuring how they're engaging with that content to make those solutions viable.
Once you have all that data, we talk data-driven marketing. How does it? I kind of want to take it from the theoretical to the practical. If you get a bunch of data, how are you looking at it to say this is the best way to spend our marketing dollars?
I take everything, again, in layers. That's really the only way, is to do a comprehensive strategy. So yes, I guess it's a theme, but I look at it from different perspectives. So I'll look at it from, like we talked about, the opportunity perspective. Are we getting that kind of engagement where we're solving real problems, answering real issues and providing real solutions? I'll also look at it from the reputation level. So there's a lot of rhetoric out there that isn't true, that's not presented by our company. So are we getting that authentic truth out there? Are people hearing this? Are they seeing what we're doing? Have we leveraged the right partnerships in the industry to share that news? I'll look at it from an interactive level. So, anything from digital website items to in-person events. How are we activating there? And also, we just brought on a product marketing manager. So I'm really excited about that as well, because that's where you tell true utilization stories, real use cases. And we're seeing that come to fruition as well. So I take all the data from each of those slices, and where the data nets out at the top in terms of engagement, opportunity, but more, how are we solving the problems for our clients? Are we successfully telling this story? And that's where I'll double down.
Yeah, I love what you said about how do I best, I'm paraphrasing, but how do I best present the value opportunity of, value proposition of our company to clients and potential clients? How do we best let them know that what we're doing is valuable for them? And I think that's a really valuable way of marketing. If you think about it like that, what's the best way to let people know?
Thanks. And I push the team all the time. Like, how is this connecting to the big picture? How is this, how are we driving back to the thing that matters, to that North Star, right? Like, that's what I encourage the team. I mean, I have a fantastic team. I'm very fortunate with this team. And I've been actually fortunate with all teams I've worked with. So that's been something I'm really grateful for. I say a lot on LinkedIn. I'm so grateful. It's true. Like, I've had great marketing teams and great comms teams, made great friends across the industry. This team is spectacular as well. and I'm always pushing them, like, how are we connecting to that big picture? How are we as a marketing team telling both the authentic value of what we offer, but in an innovative way that people hear, above the noise, above what you get the influx of a million things coming at you? Like, how are we telling the story so we're heard?
I want to bring this to the modern age because, as you mentioned earlier in the interview, things are evolving so rapidly in the mortgage industry. Technology is evolving so rapidly. The ways that we think, consolidation is moving constantly. The ways we think about what a good user experience is evolving as well. How do you keep marketing initiatives innovative to match the pace of innovation and products out there? I mean, even this year, like I interviewed Erin Wester from Optical Blue, and she's like, "Well, we just released this and this and this and this," and I'm like, the marketing campaigns around this have to be like, you're keeping your marketing department busy for sure, Erin.
I love that. Well, I mean, that's part of the fun, and that's part of this like authentic innovation. It's really cool. But to answer your question around there, it's something I think about constantly. Our product teams are moving fast, as you mentioned. We've launched some amazing AI-driven tools like Ask OB, and also for our originator assistant for loan officers, loan originators. And, we have to keep up with the pace, but we always want to have a purpose in what we're doing and what we're telling. And we're limited by the resources we have, right? I came from a 45-person team when I worked over at ICE originally, and now I've got 8 folks. So on the one hand, I know what a 45-person team can do. And on the other hand, I'm thinking, where is that delta from what we can do to what a larger team might do? And really, the innovative technology is how you do it. So there's a lot of drafting you can do nowadays, like with Copilot. And the great thing about it that I'm learning is we're not making it up. You're taking things that exist and you're crafting something, and then you're innovating and launching. And then you're iterating based on the data. So learning where to adapt technology into your process, it doesn't replace strategy. It doesn't replace the human part of creativity. It can't. I don't like the way that works when you attempt that. It doesn't work well, but it can help draft. It can help fill in some of those initial foundations so that you're constantly running, which we are. And just to give some context here. So this is something I don't think anyone in this industry's heard. So you're getting a little bit of breaking news. It's from my past though.
Oh.
So I started out working for Monster. Do you remember that company, the recruit company?
Oh, the recruit, not the energy drink, the recruitment company, kind of like.
Back in the day, I won't say the year. And I was in their creative department. So I was actually part of the team that was creating things. Mm-hmm. And I will admit that Yellow Pages existed back then, like the actual book. So we were actually, part of our role was doing Yellow Pages ads. And then this thing called the website was coming out, and people were converting to digital at the time. I've dated myself now, but everyone was worried about that. And so I innovated and started learning about digital and becoming an expert in digital and how to tell your message through digital platforms. I don't think it's any different now. We're still innovating. It's just new channels, it's new thoughts, it's new strategies, but when you are built to innovate, how and what you innovate is not the condition that you focus on, because your framework's already innovative. And wow, I just said that and it made me realize that's like Optimal Blue. So I can tie that together in a very cool marketing campaign. But honestly, that's the core of my marketing focus, is that I've constantly had to innovate since I started.
Well, I want to extrapolate that one step forward. You mentioned Copilot and the AI technologies that are available these days. They're not human, though, and that is a huge shortcoming. It's evolving rapidly, certainly. How do you see the future of marketing or mortgage marketing going from here? Where do you see it heading toward? Where are we moving toward?
Yeah, I mean, I think about that a lot. You're always going to need the human aspect, especially in a trade like marketing. I mean, creativity is individual. It's not collective, right? People come at creativity from within. They're artists, right? There's a combination. It's not science. It's really hard in my brain to understand that a collective mechanism like an AI can be truly creative, because it comes at it from what's out there and then pulls something in. but using it to make comparisons, to draft, to find, like I've had it research, like go through the website and tell me the 3 value points that are most stated in the website. And then it populates what it brings back. And I look at it and I can strategically say that's what we want, or we're missing the mark. Like we haven't hit what we should hit in this website. So I believe it's absolutely a tool that can be leveraged to be better, but it is a tool. It's a support tool to be better. And I know that that's the same principle that, we adopt in our AI technology, right? Like if you look at Ask Obi fundamentally changes how you can leverage AI to understand your profitability.
Mm-hmm.
It does that pulling of data for you so that then you can make strategic decisions based on what you're looking at. Originator Assistant really helps with the unbiased part of lending. So you can be less biased than a human, but you're still looking at it, making decisions. You're still being a person to person. And I would hate to think that the authentic narrative that is so important and so critical in today's marketing world, and really marketing from all time, isn't human behind it. I mean, it's a human story that you're telling. It's the impact of the human story. And AI bots aren't going to live in a home. It's still a human living in a home.
Yeah.
So that's how I look at it, and I'm not afraid of it. I love it in terms of helping draft, helping support, helping point out data that I may not see myself, but then I'm still connected in on the strategic part of it.
Yeah, I think it's really cool. I've actually heard in curriculum in schools these days, they've shifted from, how do you code or whatever, to how do you have creative ideas and creative thinking. It's almost allowed us to level up where it's like, it can do the productivity and the gathering and all that stuff. I'm going to be more human than ever and think about how to be, which is really neat. As a human,
Well said.
Thank you. As a human, I have human emotions. And one of them is vanity and the other one's narcissism. And those are my 2 emotions. So I have to ask before I let you go about advertising with Chrisman. Because on one hand, I think that kind of maybe insecurely, there aren't many games in town in mortgage. There's conferences, there's various media publications. We're one of them. That companies say, well, I'd probably have to spend with them. On the other hand, I think we offer great bang for your buck. The visibility is great. You work with people. There's a human element of working with us that other companies might not have. The visibility is unparalleled in a lot of ways. And I want to ask from your perspective, why advertise with us? And this is probably for people out there that are, actually go answer however you want.
Yeah. So first I want to say you just threw that question at me. So let's be clear. I hope my answer comes out, brilliant, but I haven't had a moment.
I threw a lot of questions at you today that were off script. You did good.
True. But I didn't see that one coming.
Yeah.
Again, with me, integrated thinking, got to pull out the layers. I think, there's media entities across the industry that bring a lot of value to what we do as marketers. And they each have their own value story. So it's a lot aligned to what I've talked about with kind of getting in touch with your authentic value and then moving forward with that. And one of the things I think that you and, the whole Chrisman Media entity does really, really well is reaching the amount of folks that you reach. And that true, like you said guerrilla marketing earlier. To me, there's no better method of reaching that many folks through a guerrilla method than working with Chrisman. And I can't imagine not working with Chrisman. So when I'm looking at, what my media strategy is for the year, I mean, you're definitely a part of it. That's very true.
Well, the first question of today, which didn't air, was you asking me if the video was going to air, and my answer is no, we don't do video, but you and I are still looking at each other. I'm smiling ear to ear listening to your whole answer. I was actually smiling for most of this interview. I really enjoyed this. So always a pleasure seeing you. It was actually just about 1 year ago at the Western Secondary when you and I sat down in person for the first time and talked about Mr. Tyrell coming on and how we could work together and those sorts of things. And it's been really neat to see both companies evolve over the last year. So
Agreed. Thank you for having me on. Very happy to talk about our innovative marketing strategy. I do geek out on it a little bit. I get passionate, and it's been really fun being part of Optimal Blue with Joe. It's been great. So more to come.
Yes, more to come. And we're actually going to have Optimal Blue's Jeff McCarty on the podcast next week. So more to come from Optimal Blue too.
Yay.
Thank you very much.
All right. Thank you.
There's a lot going on, impacting everything from overall sentiment to mortgage rates, if I do say so myself. U.S. Treasuries had a bout of weakness early yesterday, likely due to the Israel-Iran ceasefire appearing to be holding and President Trump saying that he will meet with Iran next week. Yet, buyers emerged after the release of a weaker-than-expected new home sales report for May. New home sales declined 13.7% month-over-month in May to a seasonally adjusted annual rate of 623,000 units versus 700,000 expectations and from a downwardly revised 722,000 in April. That was the weakest pace of sales since October 2024. On a year-over-year basis, new home sales were down 6.3%. Bond buying action was also motivated by the aforementioned Fed confirming a proposal to modify the supplementary leverage ratio for GSIBs, which, if adopted, is expected to be a support for treasuries, driving prices up and yields down. The front end of the yield curve continued to get pushed downward by burgeoning hopes that the Fed could find a reason to cut rates at the July FOMC meeting if inflation pressures remain contained. On day 2 of his congressional testimony, Fed Chair Powell didn't say anything consequential on the rate cut front. However, markets are closely watching to see if more Fed officials will break from the current consensus following tomorrow's PCE price index report, which is expected to show modest inflation gains. Some policymakers, like Goolsbee, Waller, and Bowman, have already begun softening their hawkish stance amid evidence that tariffs haven't meaningfully raised inflation. On the flip side, Kansas City Fed President Schmid yesterday echoed Powell's cautious wait-and-see approach. Lingering concerns about how tariffs might affect consumer expectations are likely to keep rates on hold until at least the September 17th meeting, unless labor market data deteriorates sharply. It's worth noting that the probability of a 25 basis point rate cut at the July FOMC meeting has doubled from a week ago and now sits around 25% chance of a rate cut. Longer dated contracts are suggesting 2 to 3 25 basis point cuts by year end. Today's calendar is packed and kicked off with a bang with the final look, or third estimate at Q1 GDP, which came in down 0.5%, much worse than previous measures, but as expected. Durable goods orders were up 16.4%, up 0.5% excluding transportation. Chicago Fed national activity for May was also there, but it's not very important. Advanced indicators came in at $96.6 billion overall, more than expected, with exports down 5.2%. And weekly jobless claims were in at 236,000, lower than expected, with 1.974 million continuing claims. That durable goods order figure that was up 16.4% was expected to increase 7.3% month over month in May, after declining 6.3% in April. Later today brings pending home sales for May, Kansas City Fed manufacturing for June, Treasury activity that will be headlined by a $44 billion auction of 7-year notes. Yesterday's $70 billion 5-year note auction was met with okay, but not strong demand. Freddie Mac's primary mortgage market survey and remarks from 4 Fed speakers. We began the day with agency MBS prices roughly unchanged from Wednesday's close, the 2-year yielding 3.76 and the 10-year yielding 4.29 after closing yesterday at 4.29%. Let's wrap up with a joke and some housekeeping. A young couple are trying to save money on their summer vacation. They bring their bags to the discount airline desk to check in. "Do you have reservations?" asks the woman behind the counter. "More than a few," the young man answered. "Well, we're flying with you guys anyway." I saw a tweet this week that was like, what's a more impressive feat of aviation? A B-2 bomber flying 37 hours from Missouri to Iran and back without refueling, or Spirit Airlines flying an hour and a half from Fort Lauderdale to Tallahassee without a brawl breaking out on board? Thanks again to Optimal Blue for sponsoring today's podcast. Optimal Blue bridges the primary and secondary mortgage markets to deliver the industry's only end-to-end capital markets platform, helping lenders maximize profitability and operate efficiently so they can help American borrowers achieve the dream of homeownership.